Good morning, friend. I will create a comprehensive guide for a short ratio put spread covering the strategy, mechanics, a practical execution plan, and a structured voiceover script format. I will also note that the search result did not provide information on qualifying US based growth stocks under $20, but I will suggest how you can find them. That's mean you will learning also how to find growing stocks. That's why I will suggest how you can find them. Understanding the short ratio put spread and growth three stacks. A short ratio put spread, often called a 1:2 put ratio spread, is an option strategy where you buy on one put option and sell two put option at lowest strike price, all with the same expiration date. It's designed for a market that you expect to be neutral to slightly bearish with minimal downward movement. Description and key mechanics. Market outlook. Neutrals to slightly bearish, you profit most. If the stock price drifts down to the lower short strike price at expiration. Position setup. Buy one put option at a higher strike price. Sell two put option at a lower strike price. Maximum gain lower strike price, higher strike price plus net premium received. This occurs if the stock price equals the lower strike at expiration. Maximum loss theoretically unlimited. Below the break-even point, the loss increases as the stock price falls towards zero because you are net short one put. Primary risk, the extra short put creates undefined risk. If your stock plunges, you face significant losses and may be obligated to buy shares at the strike price. Step-by-step practical process. For a US brokerage account, here is a direct actionable process for placing this trade. The example assumed a stock trading at $71 with 32 days to expiration. Step 1. Trade analysis and selection. Identify the underlying. Choose a stock or ETF you are a neutral or too slightly bearish on but would be willing to own at a lower price. Select strikes and expiration. Short strike $65. Choose a price where you would be comfortable buying the stock. Long strikes $70. Choose a higher strike closer to the current price. Expiration, choose a date that aligns with your time frame for the expected price move or stability. Calculate the trade. Buy one $70 put for $6. Sell two $65 puts for $3.050 each. That means $7. Net credit 3.50 plus 3.50 minus $6.00 equal $1 received. Maximum profit at $65. $70 minus $65 plus $1 equals $6 per share. break even point 65 minus $70 minus $65 plus $1 equal $59. Step 2. Enter the order log into your approved options brokerage account. Navigate the trade ticket for your chosen stock and expiration. Manually build the order. 1. Select buy to open. 1 contract the $70 put. 2. Select sell to open. 2 contracts for the $65 put. Enter the order as a limit order for a net credit of $1 or better. Review and submit. Step 3. Monitor and manage the position. Best scenario. Stock price is at $65 at expiration. The short puts expire worthless and you sell the long $70 put for its $5 intrinsic value, realizing maximum profit. Stock rises. If the stock stays above $70, all puts expires worthless and you keep the initial $1 credit. Stock plummets. Risk is high. You must act if the stock falls near or below your lower break-even point. $59. Consider closing the trade for a loss, rolling the spread to a further expiration. Hedging by buying another put option at a lower strike to cap your risk. Voiceover script, direct step-by-step format. For your video structures the script clearly, here is a proven format based on voiceover best practices. The short ratio put spread a strategic guide. Upbeat, confident traders are always looking for a edge. What if you could get paid to place a trade that profits if your stock does nothing, falls just a little or even rises? Clear and engaging opening highlights maximum profit at lower strike. Today we are breaking down the short ratio put spread. It's built by buying one put and selling two lower strike puts. This chart shows it unique. Payoff note is the peak profit here if the stock lands right on your target. Explanatory. Pace slightly slower for a complex concept. Step by step text and arrows shows. Step 1. Buy one $70 put. Step 2. Sell two $65 puts. Result net credit of $1. Let's walk through a real setup for a $71 stock. We buy one $70 put and sell two $65 puts. If done right, we receive a net credit upfront, money in our account. We calculate our maximum gain and keep break even level before we ever place the trade. Direct, instructive tone. Gain green, define and maximum loss. Red arrow pointing down. Here is the critical part. Your profit is capped but your loss is not. If the stock crosses that extra short put exposures, you must be comfortable with this risk and have a plan to manage it before you trade. Seriously. Cautionary tone. Emphasize not. Screen returns to host or summary graphic. Write key terms in summary. This is a precious capital efficient strategy for a quiet or gently falling market. It is not a set and forget trade. Use it wisely. Always know your exit points and never risk more than you can afford to lose. Concluding authority summary. Yeah. Pre-growth stock consideration. The search results did not identify specific US-based growth stock currently trading under $20 per share with associated analyst price targets. The provided example discuss Canadian stocks, BlackBerry, Poyen Plus, and cannot be applied to US market. To find suitable stocks for your strategy, you will need to conduct current market research. Follow this approach. Use a stock screener on platforms like Finviz, Yahoo Finance, or your brokerage. Use filter for price $20, market cap small or mid cap for growth, EPS growth rate high, and sector e.g. technology, healthcare. Second, analyze for suitability. A good candidate for a short ratio put spread should have moderate, not extreme, implied volatility and a price sharp that suggests a period of consolidation or a gentle round trend. Third, find analytic target for any stocks you find. Look and financial news sites for recent analyst reports, which often including price target and growth rationalized. Please like, subscribe, and comment. Another video is there. You will find out what is that.
The short ratio. Put spread is a strategic approach in options trading, particularly relevant for those engaging with cryptocurrency markets in the USA. This method involves selling a greater number of put options at a higher strike price while purchasing fewer put options at a lower strike price, all within the same expiration period. To implement this strategy, begin by selecting a cryptocurrency you expect to decline moderately. Next, determine two strike prices, one for selling more puts and another for buying fewer puts. Choose an expiration date that aligns with your market outlook, then execute the trade by maintaining the desired ratio of contracts. Achieving minimum profit occurs when the underlying asset's price settles near the lower strike price at expiration, resulting in the sold puts being exercised, with losses partially offset by the premiums received. Regular monitoring and timely adjustments are essential to manage risk and optimize outcomes. Let's take a look at 3 promising growth stocks currently trading under $20. First is Innodata Inc., a data engineering firm leveraging artificial intelligence to boost operational efficiency. Innodata is trading at $57.21 with a target price of $80 and has reported a significant 66% year-over-year revenue increase in the second quarter of 2024. Next is AT&T Inc., a telecommunications giant now trading at $25.58 with a target price of $30.64. AT&T has recently sold its majority stake in DirecTV to focus on its core wireless business, a move expected to generate $2 billion in the coming year. Lastly, WisdomTree Inc. specializes in exchange-traded products and is trading at $1,000 with a target price of $1,300. WisdomTree achieved 16% revenue growth in 2023 and is projected to increase sales by 23% in the next fiscal year, signaling strong growth potential.
And another video.
Yes!
comment. And another image is there. Please, only YouTube creators, Google has subscribed and your channel will grow. Thank you very friends. We will meet next day video.